Well, Deutsche Bank has been struggling for quite a long time in terms of profitability. They have tried a couple of times in the past few years to improve their profitability, but clearly they have been struggling. Having said that, they have retained strong franchises in a variety of core products they want now to focus on. And as you just mentioned, the plan that has just been announced is a sweeping one. It's one of the largest in the history of the bank. And we flagged earlier this week, that one of the main challenges that we see in terms of the plan and the way it will be executed will be how it will be received by the clients, and there will be some client attrition. There is no doubt about that. But one of the key questions is to which extent the bank will be able to control it. So clearly execution is one of the key topics here.
So you're making a distinction there, Patrick, between the plan as it is and whether it's physically possible for them to make these changes, and then whether they can actually do this with the current management team. Is the management team relevant to this discussion, do you think?
Oh, absolutely. I mean, very much depends on the management team. And as you know, we have seen quite significant rotation in terms of top management in the past few years, and there have been some very significant changes announced at the end of last week. Now, one of the key questions, again, is execution. And execution is not down to single individuals, but how the management team works as a team. And our understanding is that it has been a plan which has been in the making for about 6 months. I understand from the CEO that it is based on a bottom-up approach, which is quite important to gain adhesion, to gain engagement at all the levels of the banks and not only at the top management level.
Patrick, there's a conception out there that Deutsche Bank are completely overhauling its investment bank, but actually, if you look at what they're proposing, the investment bank is still set to remain pretty large as a percentage of their risk-weighted assets. To your point, it's still going to be about 38% of the group's risk-weighted assets in 2022. So it's still a sizable portion of Deutsche Bank and is expected to be so in the future. How much of their turnaround strategy is underpinned by what they can manage to achieve in the investment banking unit from a return on equity perspective?
Well, they have announced some return on equity targets which are quite ambitious in our view, and that's why we're emphasizing so much the execution and the quality and the pace of it. I agree that the investment bank will remain really significant, which is logical, taking into account the fact that the bank hasn't given up on its global ambitions. Especially as far as core products are concerned, where the bank is particularly strong. And again, having said that, the bank has managed to retain a very good franchise in some key products like FICC over the years, despite the crisis it has gone through. So yes, it will remain significant in terms of business mix, in terms of revenue contribution, but you shouldn't underestimate the fact that the investment bank is not everything, and the bank is committed to make significant progress in corporate banking, in German retail banking, and that's something they have been working on for quite a long time already.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.